Welcome, welcome. How's everybody doing? Good night. Nice, doing good. Everybody have fun today. Pretty good market. I mean, I know there's some chop in there, but man, there's things just moving all over the place today. It really didn't matter what you like to trade. Tech, the slow movers, even the ETFs are giving out just great trades left and right. Um, IWM been working these last few days. I'm wondering if today was that dip buy on it that I wanted to be part of, but we'll see. I wanted a little lower personally, but yeah, everything was working today. Didn't matter where you were, long, short. Most people got a nice hit today, so these ones are always fun. Welcome, welcome everyone. I'm just checking out some charts while we wait around. AMD getting to an interesting point finally. Welcome everyone. How are we doing? Hope everybody had a good day. Big day for Micron tomorrow. That's an earnings I'm actually interested in. Think it could do a little tone setting for the chips for the next week and a half or so. What an insane breakout on that thing today, huh? And look at that thing. Right to where you'd want it to go, huh? Just on the face ripper into Micron earnings. Love to see it. AMD got the 200 coming up. I didn't even look. I was just looking at the chart. Can't lie, I'm really looking for a short on this thing off that trend. I don't know if it's going to be a good idea though. But I like it even more with that 200 right there. I would love to short 160, 230, but unfortunately, if we push it tomorrow, I won't risk it with Micron earnings. And Micron earnings likely either saves me from getting demolished or makes me super sad that I didn't take the trade. Thanks, Shanks. Yeah, good day over here. I had some fun, the serious trades hit and even the joke around trades hit. So I was pretty happy with that. You can never complain about that. There's an event for Meta. I gotta be honest, I don't stay up to date on Meta. I hate trading that thing. Wow. Just nonstop, huh? That was move of a lifetime right there. But yeah, I don't know. There could be a Meta event tomorrow. If you're saying there is, I'm gonna believe you. Oh, Meta Connect 2024, September 25th and 26th. Learn firsthand from the developers and innovators who are building AI, mixed reality, and wearables. What's that mean? I got no idea. It's got AI though. Sometimes that actually likes to make things run. But I gotta believe that Meta is gonna have some volatility tomorrow based on it. I mean, I'm not gonna say it's like an investor event. Like, I mean, you heard it. I've known about it for like 2 minutes now. So I'm probably not the best person to ask what it means. But if they're talking AI, they're talking new, things that they can sell, likely, some sort of like, I don't know, metaverse headset, then I would expect some volatility, seeing if people like it or not. Similar to the Apple event or anything like that. I mean, less important probably than the Apple event, but okay, give me 1 second. Yep, wish I could give you more info, but I mean, you know me, if I don't know about it, then I probably don't. I'm gonna do my best to not talk about it just because I don't want to tell you something wrong. But what I always recommend is look up the schedule for any event. It doesn't matter, it doesn't matter what company, what it is. If they have some sort of event, always just look up the schedule, see if they're announcing new items or whatever it is, see when like the main press conference is. And those are the times you'll likely see the volatility if you do like to listen to those and trade around them. Okay, well, welcome everybody. Happy to have you here, Dirty River. Little Tuesday night. I think it's Tuesday Q&A tonight. They're one of my favorite things to do. Typically don't draw the biggest crowd, so we're really able to answer, anybody's questions as best we can. And I like to talk really about anything during these. If you have some questions about charts, then great. Technical analysis, great. Some fundamental stuff, we can talk that. I really just like to leave these open to all of you. There's sometimes I'll have, something that I do want to touch on in it, but I don't have much to say. The market's been trading super, super technical. I've just been getting a bunch of questions on, not only in DMs, but I get a bunch of questions on the trade floor all day, every day. And so I try to do the Q&As when I realize that I'm getting a lot of questions. And just try to, I figure if people got questions, then hopefully they're coming to the lectures to ask them. Obviously, as I said, a lot of the time they're small crowds. And so, uh, you know, there I don't want to like guide the conversation anywhere, and so like I said, I just like to leave it all up to you, and so we can really, like I said, talk about anything we want. If anybody has questions, you know like I said, all things I listed plus more, I'm always happy to talk about them. Even if you took a trade, maybe it worked, maybe it didn't work. I think that's one of the most powerful things that we typically do in these Q&As is we talk about a trade that somebody took, and talk about a good trade, not to be mean or anything, but talk about a good trade that had like a good plan, that wasn't just, you bought something and it went on an absolute ripper, like Nvidia's one today. I'm sure a lot of people bought Nvidia calls and then they just got to hold Nvidia calls. That's an awesome trade in the aspect that you caught a face ripper, but it's also you just caught a face ripper. There's really not much to say. Obviously, I've been talking on trade floor. The main level I've cared about is that 116 level, but that 116 level didn't, do anything on its own. It just it just happened to be the point where the market really started ripping. I think I was happy to hear that the owner, the CEO, was done selling, even though that was announced 6 months ago. Even the amount of shares that he was selling, he said he would take 6 to 12 months. It took him right around 6 or 7 months. So obviously he was done a little sooner than he wanted. He sold a fraction of his shares, under 1% of his shares. But the market has a funny way, and people have a funny way of grabbing onto things that just mean absolutely nothing. And so, him selling those shares was, in my opinion, one of those things that means absolutely nothing, that for whatever reason, the people and the market grabbed a hold of. So I think when the announcement came out today that he was done selling those shares officially, then it was ready to go on an absolute rip. And as we saw, it went on an absolute rip. I was talking to my buddy. I see his name in here, FaZe, right now. We're going to get him on the mic for sure. Happy to have him here. And it, he was talking to me, and my feelings on it were that chips wanted to go on a run this week. And I mean, I didn't catch even one piece of this Nvidia trade. He caught the whole piece. Good for him. But I didn't catch one piece of this Nvidia trade, even though that's where my bias was, that the chips wanted to put in a move this week. And well, I missed the move. But so with that, enough rambling. Let's talk some trading. Let's talk some things. Let's have some questions and hear what y'all have to say. Oh, and I'm looking for FaZe right now to unmute him if he wants to be unmuted. So talk about some fundamentals. Well, you can't just like generically, well, I mean, you can, but this is not a lecture on fundamentals. And unfortunately, fundamentals are relatively boring to a lot of people. But do you have like a fundamental question? When I said we can discuss fundamentals, of course we can. We can talk about, the really simple things that people can look for. Or do you want to talk fundamentals and just know a basis of, maybe things to glance at during earnings, that kind of thing? Fundamentals is just a very, very broad category. So we can talk fundamentals. We can talk about the ones that I care about, and the ones that I think most people should care about, but I don't want to go into too much detail or anything like that. But if you want to talk a little bit about them, we can. One of the first ones, one of the most important, at least in my opinions, one of the most important things that people should look at is the PB ratio. And it basically tells you how much money do they have. And I'd have to look up the actual equation on it. I never know what it is. I should look it up. Give me 1 second. So PB ratio, market cap divided by book value of equity. So what it means is how much are they worth, and or how much do people perceive them as worth, and how much money do they actually have? I think that that is a very, very important thing to always look at, because that's where, to me, it is the easiest way to see how overvalued a company is. And there's going to be, obviously, your tech names are generally speaking going to have a pretty like uh a higher PB ratio, because there is so much, there's so much weight in those things and looking to growth, and they're looking 10 years ahead. So you might see a very high PB ratio, and a PB ratio is always going to be displayed as a number. And then it's basically just going to tell you how many times its current value is it trading at, is the easiest way to look at it. And so, one that I talk about a lot, because obviously I don't like it. Let me look it up just to see where it's sitting. A PB ratio that I talk about a lot is Tesla. Oh my God, face. There we are. So PB, price to book ratio on Tesla. Currently, Tesla's trading at $250 a share. It is based on its book, based on the money and the assets that it has. It's actually worth $20.81 a share. So Tesla, as it currently sits, is trading at 12 times what it actually has. So that's one of those displays of what a PB ratio can tell you. But what you are seeing right now is something that you will obviously see with, a lot of the time when you go to study fundamentals, is sometimes they don't matter. And like, I don't want to say that, like, maybe saying they don't matter is the wrong way to put it. But, honestly, Tesla trading at 12 times its value is somewhat low for Tesla. I've seen it trade substantially higher than that, or 12 times its asset. I've seen it trade substantially higher than that. So you can't really use it for a bias of, like, trading as much, but it can tell you how the company is doing currently, money and asset wise. And then, even though it's trading at 12 times its value, that is when they're pricing these things in the market, when people are buying shares and trading shares of these things and trading the fundamentals on these things, they aren't looking at it, right now. Sure, fair, it's trading 12 times fair value, but people are comfortable owning it at 250 a share because they feel it's worth that. And they feel over time that, the book will catch up to the value. But it's kind of, I mean, it is the rough balancing act. There are other companies that trade with much higher PB ratios. There's companies that trade at much lower PB ratios. I mean, AT&T, for example, and that'll actually lead us into another one of the fundamentals I look at, is trading at 1.47. So it's trading 1.5 times what it has on the book, which, that's great. I mean, the company is worth 130, I think its market cap is 130 billion, 140 billion dollars. So, it's a really big company, and it's trading at a relatively fair value. Fair value on it is about $15. So we're $5 above that. That's fine, 1.5 times the value. That's a very reasonable valuation. Well, one of the next ones that I always like to look at is cash on hand. And what is cash on hand for some of these companies? The other way you can look at it is free cash flow. Depends how depends how you say it. And we're going to go back to another one, we're going to go back to the original one, and it's Tesla. And so Tesla, let's look it up. The free cash flow on Tesla, it is absolutely plummeting. Tesla currently has $1.3 billion in their free cash flow. So very, very little money to use and invest in the company. We've seen Elon making very questionable decisions. We've seen, Elon making very questionable decisions for the business with cutting prices and blah, 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 and killing resale value and all of those things. So, Tesla is very cash poor currently. It used to be, loaded. It was great. It was, well, through 2022, it was doing, very, very good. Obviously is not doing nearly as good anymore. So free cash flow tells you how much money does the company have to invest in itself, really. And so when you see that, that's where you kind of start to ask yourself, how much growth
can this company actually have? And we're at a very interesting time where free cash flow kind of becomes important. And why is this an interesting time and maybe a time where you might pay attention to that? Because of rate cuts. Because now some of these companies that really function on debt and need the debt and need to borrow money are going to be able to access that money a bit cheaper. So you will start to see some of these companies like Tesla that maybe have horrible free cash flow, and maybe they're going to take on some debt to invest in themselves. And that can always be a very good thing. You know, debt is a very powerful tool when used right. But so just to compare it, now we're going to talk about, and Faye's brought it up again, you know, of course, you're going to talk about these ones. Apple. Apple, on the other hand, 99.5 billion free cash flow right now. Apple has 100 billion bucks hanging out that it can do whatever it wants to do with right now. So that is a sign of a pretty strong company. You know, that like that's a company that's doing well. That's, you know, the project it is down from last year, but the projections are is that that free cash flow is going to continue to increase, especially, you know, it's a lot of that's going to be going to their new AI, Apple Intelligence or whatever, you know. But so those are the main ones that I am personally looking at right now are free cash flow, price to book ratio. As we come into a rate cut environment, how much money people have and how much money they are willing to you know spend, or are they willing to take on debt to make their company better. Those are going to be two of, in my opinion, the more important fundamentals going on right now. And then the other one that everybody talks about, and you'll obviously frequently, you know, that you'll frequently see in earnings reports as we head into earnings season is going to be the PE ratio. And that one, let me look up the equation. Share price divided by earnings per share. And so what this is going to tell you is, you know, how is the company growing? What is the earning per share of company going to be over the next year? And is that number going up? Again, I'm not going to try to, you know, really get into this and discuss it. That, you know, you don't want an insanely high PE ratio because they're going to start, you know, that's people are going to start thinking that, you know, maybe you're overvalued and maybe, you know, your price is not justifying your earnings. And so you typically want to look for a PE ratio in that, I don't know what it would be, 20 to 30 is going to be a relatively good PE ratio. Again, some of those tech names can be running much higher. But as we start to come into earnings seasons, that's going to be one that you will always see discussed around it. And basically what it's telling you is, you know, does the price justify the earnings, and you know, and price of the share justify those earnings? And so, you know, that's of course simplifying it in a very, very dramatic way, but it will come into play as we start to get back into earnings season here. So that's a quick little rundown on fundamentals. Again, those are just kind of my, you know, favorite ones, and the ones that I watch. And then obviously you want to look at revenue. If you are into analyzing earnings reports, it's always important to know what people care about for the company. You know, I love AT&T. So one of the big things that people care about with AT&T is how is their debt doing? And their debt's doing phenomenal for anybody who cares. And how are new subscribers? They want to know that those subscriber numbers are still going up. So that's something they care about. Obviously, right now with Apple earnings, the main focus for everybody should be how are sales in China, and is India covering the reduction in sales in China? Because that's what a bunch of people care about on those iPhones. And so always know with, you know, always know with each different company and each different earnings what the investors care about. You know, that's like with Amazon AWS stuff. You know, all of those things are what people care about. So you want to find those numbers in the earnings report and kind of ignore all the other stuff and say, is the part investors care about right now doing well? That's like, you know, Nvidia, are they still selling billions of dollars of chips? That's what people care about. So that's my quick spiel on fundamentals. I know it took 15 minutes or whatever, boring to most people, but let's see. What do we got here? Yeah,
Hey, Robert,
Raphael, Tesla does just defy fundamentals, and not a compliment, not a good thing, you know.
Oh yeah, buy and sell volume. This one, well, it's just not on here. Give me 1 second. I'm assuming you're talking about this one up here. And so that's a pinned study in my tab. It was made by the guy in here, Assassin, good friend of mine. But if you go to my tab, it's pinned in there. If you can't find it, just shoot me a DM. And then oh, oh, sorry, reading the second part of your message. No, it does not work on mobile, unfortunately. And dude, you gotta lace me with some of them black cherries. I want that. Yeah, Faze, I should have talked small caps, but I didn't want to, talk about too much crazy, too much crazy. Oh, we got Mike in here. He's asking about NVIDIA. I wonder if he was asking about NVIDIA's PE ratio. That's actually kind of a good question, Mike. If that's what you were asking. Uh, so NVIDIA's PE is sitting at 54.56, high, but not even ridiculous. Like, I mean, that's perfectly reasonable for what that company is doing. Price to book ratio sitting at 49. So it's trading at 49 times its actual book value. However, I don't want to say that it's justified. Um, I don't want to say that it's justified, but like it's also kind of sort of justified. If you have that, long-term view, I don't remember. I swear they say the AI market's worth like 30 trillion or whatever, or $20 trillion or some craziness like that. And when you consider Nvidia is the AI market, trading at 49.50 times its current value is really not too insane, especially if you're looking at that 5 or 10, year down the way. Yeah, if you really want to understand fundamentals, go study balance sheets. You're exactly right, Faze. I'm happy you said that bit. And that's for if you like that, because that's one of the interesting sides of fundamentals. It's boring to some people. I'm kind of included in that. That's why I personally keep it so simple. And if I have important fundamental questions, I go to people who know better than I do, like Face, for example, Tilio, for example. I keep it super, super simple. Look at the book, look at the PE ratio, look at that free cash. And then, when it comes into the earnings, are they making more than last quarter? Are they losing less than last quarter? I just keep it simple and say, hey, they're doing better, they're doing worse. I know that doesn't mean the stock will go that way, but it at least tells you what it's doing. Exactly, Phase. Yep. Opens up the balance sheet for sure. Yep. And revenue increasing over quarter. Yeah, and then Phase, that's going to be an interesting one. Is debt increasing and why? And that's what we're going to see a lot over this next year. Are people taking on debt to make their company better, or are they taking on debt so that they can pay a lower interest rate? And if they're taking on more, swapping debt for other debt just for a lower interest rate, that I don't love. If they're taking on debt to actually make the company better, that I love, and it's worth having their eyes on.
I mean, I guess that's where the small caps are really going to be able to show and outshine during this cutting cycle, right?
Exactly. That's
Where
the
if you
whole
start
mindset
seeing,
behind it. We're going to see,
Mhm.
you know, we had a bunch of terrible little small cap companies weather the storm through 2022. And then even 2023, as most of them got no love. They've been seeing it more and more the last 6 months. But as the next, cut or two comes out, whenever it comes out, then we'll start to see which of these companies are actually going to keep lasting, because they'll be the ones that survived the storm without taking on so much debt it crippled them. And it'll become very apparent very quickly which ones those are. Yeah, NP, you're right. That the Blackwell deal is, I mean, I think my opinion is that is the only reason Nvidia has seen any downside is having to bump that back. I think that's my opinion. I know that's probably way oversimplified, but you cannot look up the numbers that Nvidia is putting up, even with that deal being bumped back, and think anything bad about them. That's my feelings on it. I like there's nothing about Nvidia that is doing bad as a company, and yet it's still, well, after today, a big breakout, but God, we're still down 15%, probably off highs. Let's see. 14, 13% on the close off highs. I mean, that's still, down. We were in bear market territory not 4 days ago, so yeah, you can't look at that and think it's bad. Mike, good question. They did a buyback.
And does that affect their PE ratio? Not necessarily. It can, it can affect their money situation, which will affect, your PB ratio, which could affect your earnings because you'll have made a little bit less money because you're spending $50 billion to buy back your own shares. The hard part of that is you might have a little bit less money, but you are showing that you think your company is good enough to put $50 billion back into it. So yes, it could have a little bit of an interesting effect on the PE ratio, but even if it, bumps the PE ratio a little bit higher, it would be for a very good reason. Yeah, exactly. A stock buyback is pretty much a cash on hand. And then when a company splits and starts buying shares back, they're lowering the float, which is theoretically good. As long as the float's going to them, that's normally a good thing. 50 BPS exposure cause us to go into a recession? No. I mean, there's no reason to think we're going to go into a recession right now. I mean, we got a ton of jobs. We got more jobs than people available to work. So, we got a strong labor market. We won the battle. We won the battle with inflation theoretically. Won the battle with inflation. Going into a rate cut environment. Jobs market strong. We had that downtick in consumer sentiment today, but I got to believe that most of that data was pre-rate cut. So chances are that next consumer sentiment is going to just skyrocket because people's mortgage rates went down. Well, adjustable rate mortgage people went down some, and non-adjustable, which you should have most of the time, hasn't gone down yet, but refinancing is now on the horizon. So, I mean, as a whole, if you aren't happy with the American economy right now, you likely don't really understand the American economy. Overall market sentiment in October, it is generally bullish. However, the interesting side of it is that October is pretty much November, and November is election month. So Octobers in election years can be a bit of a wild card. You'll typically see just some good volatility. What I've been telling people is, and we unfortunately never got as big of a pullback as I wanted. I'm still not saying it's fully out of the question into those elections, but you typically have some pretty good ranged volatility in a large range with good volatility for October leading into an election. Well, it is virtually impossible for us to go into a bear market in October. I mean, I don't want to say like impossible, but for us to go into a bear market right now, the S&P would have to drop $114 from here. So I think we're probably going to avoid that. Yep, exactly. Face companies happy enough with themselves to be like, hey, self, here's 50 billion. I mean, Mike, you should just be sending these messages publicly. Make it easier on us, so make it so everybody can read your questions. And they haven't been horrible, so I can't even complain, there is absolutely no risk involved with this. NVIDIA is an extremely strong company, and they are happy enough with themselves that they will continue to invest in themselves. As most people, if you're a long-term investor, you should have NVIDIA holdings. Everybody does. Everybody holds NVIDIA, so it's worth it. Well, that's fine if the labor market data is being propped up, Phase. Regardless, if you strip out the last 3 years, cut our labor data in half, and it's phenomenal. So, everybody is only thinking about this post-COVID labor market where we have a bunch of people working multiple jobs, more and more turnover because people think they want more money, and so we're having a lot of turnover. Regardless, those revisions are good when those labor revisions come out, because that's the Fed being honest. I know everybody wants to say, oh, these false fake numbers. Well, you should be happy because they're removing gig workers, they're removing doubles, maybe somebody who quit a job and got 2 jobs, they're removing that. So, revisions are great and they show accuracy. But it's always important to remember, and of course, post-COVID society is a little bit different, but pre-COVID, our numbers are phenomenal. So even if we cut them way back, tens of thousands of jobs, they're phenomenal still. So you stick with that.
So let me ask you a question, because I'm no longer in the financial institutions, but I still have a lot of friends who are in the FIs.
Uh-huh.
I'm seeing something different than what the street is coming out with, right? Based on what I'm hearing, labor market in financial institutions, jobs are not being held. In fact, backfills are people are leaving companies. Uh, they're not necessarily getting new jobs, but they're wanting that convenience, whether it be remote work, whether versus hybrid work versus being in office. So they're leaving jobs for that reason. Many
Yeah.
people are going into the gig economy where they want to have side jobs or side hustles as compared to working an actual job. Great, that's all understandable. My question to you is, and this is where I just have a little different mindset, or at least a different perspective on this. I think that once you start seeing some of the fallout that we saw over COVID for the past 2 years, obviously COVID happened. When COVID happened, there was an immediate need for more workers, more remote workers, significantly more infrastructure. COVID ended, things started going back to normal. Well, when COVID was happening, people were leaving jobs for that 50, 60, $70,000 bumps. Those people are now on the chopping block for any and all financial institutions. Why?
Yeah.
Because they are the heaviest weighted. Problem is that as they are starting to lay off. We're not seeing massive layoffs. I'm not saying that Bank of America has, fired 25,000 people or anything like that.
Uh-huh.
Not anything to that effect. But the people with bloated salaries that, you can get now, somebody who was getting paid $175,000 last year for the same job, now they can get that position filled for 140. They're cutting that person for 175. And so slowly but surely you're seeing all those inflated salaries get cut, and you're starting to see that people aren't backfilling roles because they don't have the cash on hand in order to fulfill it. They're seeing that certain projects, Bank of America had a massive $35 million project that they've been working on for 2 years. All of a sudden it was scrapped. Over 125
Yes.
people here in Charlotte were laid off for that reason.
But
My,
we have, and
and
I
so that's my only question to you, is that at what point, and you may not have the answer for this may be a Tilio question, but at what point do you think that these after effects of COVID, which we haven't had the opportunity to really start seeing, that
well,
now that rate cuts are coming, we may start to see with the labor market? When do you think, if we'll even see those?
well, I do think that so I think most importantly, big picture, like biggest picture of all, we always have to remember a 4.2 or 4.3 unemployment rate is phenomenal. It's absolutely phenomenal. In the last 20 years, we've had uh 4 or 5 years where unemployment on average was under 4%. 3 of those years were 2021, 2022, and 2023. The other ones were 2018, 2019. And then obviously 2020, we have COVID. So that's, it is what it is. But before that, we had not had an unemployment rate under 4% since the 90s. So a 4% unemployment rate is phenomenal. That means four out of every 100 people aren't working. That is really, really, really good. What I always encourage people to do for any sort of economic data, any sort of thinking, US or not, look at how the US is doing and then go look elsewhere and kind of, take that big picture into account. And you will see that, first off, a below 4% unemployment rate is mind-boggling good. That's as good as it gets. That is what is known as max employment, because it's hard to get below, 3.5% is like, if you're below 3.5%, that's just insanity. And so a 4% unemployment rate is very, very good. I think where the fallout we're going to see, and we actually saw it in tech here a couple of years ago. Remember 2022, everybody's freaking out because, oh, Microsoft fired 10,000 people or whatever it is. Well, that was, in my opinion, COVID runoff. Because what we saw in 2020, 2021, even into, the beginning of 2022, massive over hiring. And I think part of that was because so many people had gone to work at home. Whether the work from home was good or not is, that statistic is debated. But I think so many people went to work from home. A lot of companies overhired just to make sure that the work was going to get done. And then we did start to see some of that layoff coming, and we saw it through tech. Obviously, tech's not some, it's not a huge part of employment in America. Obviously, the government is the largest employer in America. And so that is where I would keep my eyes peeled. If we really start seeing government jobs pulling back, that's when we want to kind of say, okay, what's going on in the labor market? Because if the largest employer in America is not hiring, then we likely want to take note of that. But in my opinion, we want that 3.7 to 4.3 unemployment. That's phenomenal. And you can't be unhappy with that, it's just a really, really good number. So I think, you know, I think that that's how we have to look at it is if the government stops hiring, stops creating jobs, then we get worried. But I just don't see that happening. Could some bankers lose their job? Absolutely. Could some tech people lose their jobs? Absolutely. I do think where we will start to see, some like something that really needs to be considered is AI. It can do a lot of the jobs. I mean, I don't know, say you're, a mortgage broker.
Well, AI is already starting to take a good
Yeah,
portion
I mean,
of tech jobs.
Chat
And
GPT can Chat GPT can
it can
write
code
you up
anything and
everything
everything
you
for
need
you
to
now.
sell or buy a home, in 30 seconds for
Hell, I use ChatGPT to build out my contracts, bro. I mean,
dude for $4.99 a month, or I mean, I don't know what it costs, but it's like you can pay a realtor 6% or whatever, and and to have them do the paperwork, or you can hit up Chat GPT and say, can you do every single thing I need to sell my house? And then you can go to the bank and do a direct sell, I mean, so and I like, is that good? Is that bad? I don't know. I mean, I don't know what to say. I'm a fucking old guy, so I'm scared of this. Sorry, pardon the language, but I'm an old guy, so I'm scared of that kind of thing. But there's no denying that AI can do a lot of things better than people can do them already. And I think that's only going to continue. But I do think you're right. There might be some more pain to come, but we aren't gonna, I don't see some massive recession. I don't see some breaking in the labor market. This 50 BPS cut, still not sure how I feel about it. Powell talked very nice and pretty dang convincing. I'm still not fully convinced that they weren't a little bit worried because, they dropped the federal funds rate by 10% in one meeting. If you want it, overall, you drop it 50 basis points from 5.25 or whatever. They basically dropped it 10%, 8% in one meeting. That shows that they do want it down now, So I'll be very curious to see how these next rate cuts go. But for now, I just don't, I can only look at the data. I can, of course, make my personal feelings off of the data, but I'm looking at it right now and saying, we got 7 million unemployed people. We got 7,800,000 jobs available. There is work for people. Of course, that doesn't mean it's a job you like, but the work is there. The jobs are available if the people want them, is what I can gather from the data so far. Mike, I see your question. So there's a lot of layoffs and high unemployment because of illegal immigration. That's not exactly what he said. And I think Tilio quoted it in his newsletter in there, but he did say that some of this uptick in unemployment likely had a little bit of an effect on the labor market because those people are actually working, but we might have a few more illegal people working. But how Pal said it, it's not like it was a concern to him. It was more just hey, we have large immigration as into the US as we have for the last 8 years, record-setting immigration. So, yeah, they are working, they are working. But as I mentioned, we got more jobs than we have unemployed people, and those people are willing to work the jobs that a lot of people aren't, unfortunately. So it wasn't stated in a bad way coming from Powell at all. It was just merely a fact from the Fed, you know? Yeah, I saw Amazon did that raise. It's because they know they're gonna get unionized. I hope they do. Good for them. Oh yeah, Raphael, you're saying kind of what I saw at the company you work at. You saw 2,100 people laid off, and to me, and you're saying because of inflating during COVID, and that's just that's just a lot of that's a lot of people hired that maybe didn't need to be hired. Yeah, inflation under 5% with unemployment that low is an absolute miracle. And that is just to kind of go back to the rate cut things. That is something for me that actually makes me very happy because an over 5% federal funds rate with inflation at depending what stat you look at, low to mid twos, which is also phenomenal. People don't understand that, but inflation low to mid twos and a federal funds rate over 5%, that is entirely too restrictive. I mean, that is very, very restrictive economy and for low inflation. And the Fed's main focus is price stability, and fight inflation and price stability. They've achieved that. Don't get me wrong, prices are still high, and I hate to be the bearer of bad news. They won't go down. That's not how inflation works. Inflation has nothing to do with prices coming down. Inflation only tells you how much prices will go up over the following year. So unfortunately, right now, until companies, make the ethical decision to reduce their prices aren't going down, everybody. I hate to tell you. Yeah, right. Get with the times. I need to. I'm scared of these computers, man. I grew up on Terminator and you guys are just making it. Yeah, I'm 87. Yeah, exactly. I mean, I didn't even know that about you, Raphael, but yeah, I mean that like they don't understand that that's really good. And then my dad and I, we were actually talking about a like interesting side of this is the other part that people forget is that from basically 2008, 9 until 2016, 17, we had no inflation. There was like, I can't say no inflation, but little to no inflation. And then it started to tick up into 2017, 18. And then obviously COVID just blew it out of proportion. I mean, that is other than the Fed sticking with ZERP for too long, zero interest rate policy for anybody who doesn't know, and COVID, those are the causes of the inflation. Don't let anybody tell you otherwise. But those are the main causes of that inflation. But my dad brought up this point that, we had no inflation for, I mean, 8 years, 10 years. And so we kind of just played catch up, like I know that people don't want to hear that, but like, a gallon of milk in 2007 was $2. A gallon of milk in 2017 was $2. So nothing changed on the price there. Well, now a gallon of milk is $5 or whatever. So you have to think of it that really if inflation had not been zero and had been that very reasonable 2%, we would have been adding some dollars to those gallons of milk that just never happened. And so because of that, we really got clobbered. And then, again, I hate to be the bearer of bad news, but inflation does not mean prices come down. So the prices that we have are here to stay unless companies decide to lower their prices. And that's regardless of how, it's ignoring if we get, some potential tariffs or anything like that, like people are discussing, that's, tariffs are pretty widely regarded as a tax on consumers because it's always passed down to consumers, and that's how tariffs work. So that could even increase prices more. So we just got to see how inflation goes and how everything goes over the next couple of months. But as it stands right now, labor market's great, stock market's great, inflation is great, unemployment is great. So really things seem pretty dang good, at least in my point of view. Yeah, MP, and I mean they build everything. Like I worked construction for years, and we had some guys from Mexico, and they were unbelievable. They were the greatest workers ever. And like if you think that any construction done in this country didn't have an illegal immigrant touch it, then you're probably sorely mistaken. Barring unions, So that is one of those interesting things that the people who hate unions also hate immigration because, I mean, the union people are the main people fighting immigration. You know, they don't like that. So it's interesting.
I'll just add to that that I can vouch that there is no construction taking place without illegals working on it.
Yeah. If you think your house didn't, some part of your house did.
I mean I work with a lot of people, and the majority of them are illegals. You know, it's unfortunate, but you know
Yeah.
most of these guys are
But
hardworking,
also they work
good
harder. They work longer
good
hours.
guys,
They do
good
better
family
quality.
people, hard workers, and most of them, believe it or not, are actually trying to get their legalized paperwork.
I mean, everyone that I have ever worked with had two goals for how hard they worked. They wanted to be legal and they wanted to be able to
Send
send
money back
money to
home.
their families. That's
Yep.
it. That's what they want. And they show up to work happy and smiling and work hard. And they're never going to be the first ones done. They're never going to be the last ones there. They work all day. They work longer than everybody else, harder than everybody else. So yeah.
Yeah, but most of the time they show up to the job site hungover, not happy.
Yeah. But God, we had this one guy though, he was the greatest man. He'd show up, 6 a.m., plug in the crock pot, food's ready to eat at noon. I mean, he was the greatest dude ever.
These guys, I have people who literally they'll bring a microwave onto the job site just so that they
Yeah.
don't have to go anywhere and grab food. Very, very humble people.
Very humble and very nice. Yeah. Yeah. Okay, let's see what we got here. Two Zazzler than the 19th Amendment. Uh, yeah, FaZe, that's the thing. That zero Fed fund rate, that saved America, I mean, Obama worked a miracle there. However, that ball started to be fumbled come 2015, 16, 17, where they didn't stop it. When things were going, I mean, let's be real here. It was to live in America in that, post 2009 was rough, but to live in America from 2009 until 2016 was an extremely happy, great time in this country. And so, but it was so good that it was time to start increasing those rates, and as we saw it, they tried in 2018, and there was random rate increases here and there, but they were always small, and we always ended up back at zero. And then when they finally tried in 2018, the administration shot that down in a big way, and so right back to ZERP, and ZERP was a horrible policy to have heading into COVID. We unfortunately didn't know that, but it was the nail in the coffin for sure, in my opinion. What do I make of a headline of debt to GDP of 122%? Well, you know, gun to my head, the the biggest issue that we are facing in America right now is the national debt. In my opinion, that has been the biggest issue for the last 8 years. We had between 2016 and 2020, the national debt over doubled. Now we're looking at likely doing that again. I mean, maybe it has. I actually haven't looked, but 2020 to 2024, it is likely doubling. That is because we had two administrations in a row that spent with reckless abandon. But the two last administrations were spenders. They spent a ridiculous amount of money, but it is a different time. And do we have some debt? Yeah. It's mostly in Social Security. Everybody always tries to talk about, China owns our debt, Japan owns our debt. They don't. I mean, they own a little bit of it. I think the largest, I don't know, I'd have to look it up, but I would imagine the largest debt that we have to a foreign country is $800 billion, and our national debt's 30 some odd trillion, so we're sitting less than 1/30th of our debt to our biggest debtor. I mean, God, we owe Canada like 500 billion or something from the bonds, and so do I think that our GDP being outweighed by our debt is good? No, no, absolutely not. But it's also not something that I'm going to let concern me. As things start to change, I mean, the US is dealing with the same thing as everybody else. They are also dealing with high interest rates. And as interest rates start to come down, that will be good. It's also important to remember that a lot of those bonds that are owed to other countries are 20-year bonds, 30-year bonds, as in we pay our interest, but we're good for 30 years, you know, like, and so it's always important to take the big issues into consideration, big view into consideration. Is our national debt to GDP ratio good? Absolutely not. Do I think it will get better? For sure. We'll see, you know. We have two very different administrations coming in. One of them that doesn't care about the national debt, and one that does, you know. So we'll have to see how it goes. As far as little room for error on this landing, it's pretty hard to say. We I would say, you know, we've touched down. We haven't fully landed, but we have touched down. So we are on the right track for sure. Let's see. Okay, well, great questions, everybody. This was a fun one tonight. I really appreciate it. We got 10 more minutes. You know, what else you got? What other kind of questions you got? Thanks everybody for being here. Thanks, FaZe. Thanks for the awesome discussions. But let's use up our time. I know people got to have some more questions. I guess I could even say, you know, what the other things to really consider uh are, you know, it's the interest that worries everybody, you know? And so that's what we want to see come down. We need to see our interest rate come down. I know that we're locked in at high rates on a lot of these bonds out there, uh, and so we just have to see what happens going forward as far as our national debt. I do think that we have some things on the horizon and at least some potential ideas that could really help, you know. We have those massive tax cuts that would be rolling off next year, maybe this year. I don't exactly know when it is. And you know, the massive tax cuts to big business, which in the end, I think over the 8-year period that their 6-year period, I think that they were put in state for, it was around 6 trillion in taxes, which would have done, you know, when you look at our national debt, I don't exactly know how much it is, how much it's up currently during this administration, but I can tell you that if we had had $6 trillion more going to the country, we would probably be a lot more happy. At least, you know, for where we would be right now. But we'll see, you know, we just got to see what happens. Let's see. How high will SPY go tomorrow? Do you want my honest opinion of SPY? Because I'll tell you what, a lot of people hate it. I'm hoping that we see SPY somewhere down around 565 over the next couple days. That's my hope. That's where I want to see SPY go. Lunar. Is that thing oh yeah, amazing. That's oh no. Look, I only have 2 lines on the chart. Oh man. Q is just really proud of that one there for a little bit. I mean, it's make or break right here. You know, this below 736, that gap is filling to 630, in my opinion. Could be a bounce point, could honestly be a really nice bounce point, but I would watch that 736 as that line in the sand. Oh, Kyle, these recent ones. Are you kidding me? These recent ones, without a question. I mean, don't get me wrong. This, like, when we, you know, if you really look big picture, you know, when we were trading SPY, because this is back here is where I started 2000 around here. No, even back here. So back here was where I started really focusing on options. And I started focusing on options more because, you know, we had a person who was likely going to cause volatility in the markets. And we had a person that was anti-tax and anti-big business regulation. So those things tend to bode well, tend to provide volatility for the market. Well, back here, you know, if you go back to these 2016, 2017 times, look at SPY, you know, we were trading buck and a half days on SPY most of the time. You could have some mayhem, you know, like here is the Fed trying to save us and raise rates. Here's where the Fed was threatened to be fired if they didn't start cutting rates. And then we ran, you know, inflated market, serious supercharged QE market. As you can tell, I mean, SPY runs from 230 to 340. You know, just to show you how unhealthy the market and the economy was from 2016 to 2020, the market moved 100% twice. That's how insane the market was. So, this is where I started trading on options then, or, back there. And so it was fun, but the moves were much smaller. Then post-COVID market, obviously we had wild QE all the way up to the beginning of 2022. SPY was much higher. A $200 SPY has a hard time moving a buck. A 380 SPY moves a buck easy. A 400 SPY moves a buck easy, And then obviously all of this volatility through 2022. So if I had to pick the best years ever, it's these recent ones, basically COVID on. This has been the most amazing stock market ever, in my opinion, and many others' opinions, Non-biased people feel like this stock market is phenomenal. And has been since 2020, basically. Look at everything I would consider when trading SPY. That'd be very hard to demonstrate, but I can explain, so on one screen, so I have 3 screens, okay? On one screen, this is literally my main screen, the one that I always pull up in classes. This is what I look at day in and day out, is this chart, or not just SPY, but whatever I'm trading. I have big on this screen. On my screen next to it, I have 4 squares. So it would look like this. And on those 4 squares, I have Apple, I have Amazon, I have Microsoft, and I have NVIDIA. Then I have my levels, I got all my daily levels. I don't ever need to chart anything because I'm trading all the time. So that's why I don't chart at night, really. But so I have my daily levels. I pull up the short time frames. Then I start looking at these things and I see what I want to trade. So now I've looked at, and the reason I look at these 4 is they're 4 of the biggest holdings of SPY, over 20% or whatever. So I know they're going to move SPY. Then on little tiny charts, on my other main window, I got XLF, XLE, ADD, VIX. So how I trade those things, I want to look for XLF, XLE at support. Then I want to start looking at these big names and saying, do I want to buy the dip? So I'm going to say, well, we got Apple at support. Well, we got Amazon at huge support. Well, we got Microsoft at huge support. Well, we got NVIDIA at huge support. I'm not shorting this. I'm longing this. The market is either about to bounce when I see all of this, or it's going to break down and I take my tight stop out. But when I look at the market and I'm like, okay, 7:30, that's the 1 minute. I don't know why I pulled up the 1 minute for me. 7:30, we got market kind of looking bottomy. 7:30, 7:45, market looking good down here. 7:30, 7:45, buying back up above resistance. 7:30, 7:45, market looking strong. I don't remember. I think XLF and XLE were pretty well weak all day. Yeah, for most of the day. But we got a nice double bottom being set on XLE, 7:30, 7:45. I bet if I pull up XLF, 7:30, 7:45, potential double bottom on those, I'm buying calls. And I did buy calls. Because the market is telling us we're going to bounce. So I'm going to use that kind of confirmation on every single trade that I take on SPY. And, as you get later in the day, really that last, 2 hours or so of the day, you can start to look at SPY and, say where it's been bouncing, you can oh, look, and then even look at this, 7:30, 7:45, nice big daily level. I mean, there was every reason in the world to be long down here. I even posted my charts early, hoping some people would catch it. But so from all of that, I don't know what the market's going to do, but I can make my very best estimate. I can take a very quick glance at 6 charts and have a pretty good idea what SPY might do. What should we keep an eye on for tomorrow? I think we should look for an AMD potential rejection up here at 162, but you shouldn't swing it because we got earnings. And then I think Amazon, any dip down towards 190 is super, super buyable. And then if we're able to push up to about this 196, I'm looking for a short up there for sure. Microsoft, we'll see, because it doesn't look wonderful on the daily, but we know previously this 427, 430 area was a big zone. So I kind of want to see a break and reclaim of 430 for some upside on Microsoft. And then Apple, this 225, I'm feeling like I missed it. I got a hunch Apple wants to put in a decent bounce tomorrow. But I'll be dip buying all the way down to 225 or so. At least that's what I got my eyes on. Ooh, really even down to that SMA. But dip buying down to 225 for me. Gold is flying and gold has more, but I sure hope that gold gives me a dip to get in there. Gold's going to go tap that 250. GLD is going to go tap that 250, in my opinion. And we'll see what it goes there. I don't know what that would put the ounce of gold price at, but it would start pushing that 27, 2800 on the gold futures, you know. So I think it has a little bit more. I would definitely be in dip buy mode on it myself. Noodle. Let me guess. I can almost guarantee you noodles in some 1024 fucking five. Sorry, pardon the language. 580 calls on SPY. Do I see SPY and QQQ going up? I definitely see QQQ going up. I mean, let's be real here. QQQ wants to touch all-time highs before year end, but they're making it pretty cut and dry for us. Like I ain't long on QQQ at 485 up to about 487. I will tell you that much, but a break above, and I'll look for that push to 490, 494 zone. SPY, I want to take a pullback, man. Give me a pullback to buy. I mean, I bought this one, but I sure would like another one down here somewhere to buy. Yeah, I mean, Mike, you won't like my answer to that, so I'm just not gonna answer it. Do I grade my levels? No, because every level is off the daily time frame. So I know that every single level is off the daily time frame, and so I don't change them. You know, I don't ever change them. Yeah, you don't even know my pain of Apple. Uh There's my Apple calls entry. And then I sold them right here. And then now Apple is, well, it was up there. So I got in here, I sold them here. And then that happened. The volume shift, ignorant trader, great question. So that's really the next thing that I would be looking for on something like this. And so what I do, and I frequently don't post it in my tab because I know it's not for everybody, but a lot of the time I'll have this volume study and then I'll actually run another one right next to it. So this is going to be the 5-minute volume study. And so I would buy SPY here, did buy SPY here because big level, potential double bottom. There was reason enough to be getting in here. All of those other things, you know, all the other names getting to a bounce point. Generally speaking, though, I'm going to watch a candle form. If it's a double bottom, double top, I'll try it, you know. But I'm going to watch a candle form and I likely want to see some kind of reversal candle. Obviously, this one, nice reversal candle, but I wouldn't buy the high of it because it's too far from where I wanted to enter. So I would wait for a break above this level, and likely this would be the entry on the retest. But I like to see a nice reversal candle form, whether it's just a big old, you know, bowl candle, or maybe it's a candle like this that's like, oh yeah, they tried. They didn't trick anybody. Like I'm sorry, like if you shorted this, I apologize, but there was zero reason to be short, you know, after this candle. And so we got a nice reversal candle here. At this point, I bought some calls right here on the break above it, looking really just for that opening range touch, which happened to come very quickly, knowing that my stop was about 20 cents below me and I'm targeting, you know, 40, 50, 60 cents above me. So I generally wait for a nice reversal candle to form. Even this one, when we were trending down, I bought this dip on this candle, sold down to a good level, was a breakout level previously, had enough reason to be getting in there. I wouldn't have hated it, but you even could have taken this one, break a 9 EMA, break of opening range, nice reversal candle, enter here, stops under opening range. Obviously we had the trend, but you got a nice pop. Time and sales and levels too, for me, are just too confusing, too much, not confusing for me, but they're full of fake outs. So they can be confusing. That was actually, I shorted this I shorted this. I think I did this in Mastermind. I shorted this. I got out the same candle because on level 2, or maybe I shorted this one. I don't remember. You could go back and look at what it was. On level 2, huge ass sides. I mean, I was seeing 50, 60, 70 on the ass side on SPY, you know, huge ass sides. And then they disappear. And so once they disappear, I was like, okay, I'm going to get out of the trade. And then, of course, it went without me. Would I short bros? Okay, let's check it out. Well, what's up with that? I mean, no, this is sort of looking breakouty, if you ask me. I don't know. Ooh, ooh. No, I wouldn't. I likely wouldn't really hit a trade right here. You know, breakout retest of the trend, targeting these highs. It's tricky. Oh, I'm on bros, brown and brown. Sorry, I just looked at the price. Oh, bros, under this trend? Yeah, I'm assuming that's what you're talking about. 33.72 level. Yeah, great idea. Sick one, Kyle. Thank you. Love that. Yeah, there we go. Yeah, love that. Break under that trend. I'm assuming that's my weekly trend. Yeah, break back under that trend and that thing could dump down. Love to see it. Take a look at Baba. I mean, like I have this short it. Just short it. It's gonna come back down. This thing can't hold a breakout to save its life. Yeah, look at that. I'm short Baba at 100. I almost guarantee you. This is just a rip on stimulus news. It's not, this was a rip on stimulus news. This is Baba's chart, you know. But for me, I'm not gonna, I'm not longing this thing, I'll tell you that much. I mean, I would short it here. Congrats to anybody who like took the terrible double top long entry and got paid though. That was sick. So I mean, my stop is always the same stop. The issue is so when you're looking at something like that, even this one, so nice reversal candle. As I said, it was too high. Your stop is still the opening range. So you have widened that stop enough to say, you know, now you need to make sure the reward supports it on the other side. Do you have 50 to a dollar upside? You know, fortunately we got it, but if you took this entry, you had basically 50 cents of upside, 50 cents of downside. So you were one risk reward. If you took it, you were also buying at the trend, which is risky. But if you took it, the second this candle closed and you were over this level, then you're kind of in the clear. Then you get the pop trim VWAP, and here's your stop deep in profit. But that's why you want to buy down here, because this is your tightest stop, less risk. You know, you're risking 10, 20 cents. Obviously, if it wicks down, you don't just stop out, you know, so your risk likely ends up being a little more than your planned risk. But you buy this double bottom, stops on closes of a new double bottom. Whereas if you're buying up here, you really got to stop under the break. Norvin, you're just too much. I even get private messages about you. VST, yep. Uh-huh. It's flying. I don't know what this pump and dump is. I still don't. I mean, I looked it up, but it didn't make sense to me. Nice breakout. Here was the entry. I saw they got an upgrade, so that's the only reason this happened. Wow, and on a dividend date? That's wild. That's pretty wild. Yeah, nice rip. I don't know. Really, if it dips back down to this one at 743, probably not a bad trade long. Previous all-time high. Love to see it. My favorite indicators. Somebody sent that private message. I mean, I don't know. Nothing. I mean, I just a couple of EMAs, 9, 20, 50 I like that 5 and 13. I like the 13, 34, all of those. But I like support resistance trends, VWAP, hourly 20. If I had to, you know, if I had to pick two indicators, it's probably hourly 20 and VWAP. Okay, well, that's gonna do it. Thank you so much, everybody, for being here. I really appreciate it. This was a great Q&A. Tons of conversation. This was perfect. This is exactly what we want out of these. So thank you all so much. And we'll catch y'all tomorrow. As always, my DM's always open. Let me know if you have any questions or anything, and we'll talk about them. Thank you so much. Have a good one. Yeah, thanks everybody. We'll catch you later.